we have the current stock market analysis for NIO Incorporated, stock ticker NIO. Before we begin with today's chart analysis, if you find this informational, educational material to be helpful in your trading, please remember to click the like and subscribe buttons so that other traders will be able to find this information more easily on the platform. So as we can see here, what we're looking at is the 4-hour price chart. And what we can see in this time frame is that each candle represents a 4-hour trading period. Currently, what we're dealing with is a bit of an elevated price structure at the moment because share prices themselves have seen a tremendous rally recently, moving off of the prior lows at $3.68. We have been watching this area for quite some time. This was an area of support that was expected to unfold for this stock. But now that we have seen these trend movements higher, we do need to take sort of an intermediate view of this price action, sort of a mid time frame viewpoint of this price action, so that we can try to make a determination about whether or not these recent rallies are ready to reverse lower. Anybody that has sort of entered into this position at upper levels could be at risk if that type of event were to occur. So we do need to identify some important price zones that would be signals which would suggest that this rally could be reversing if that does turn out to be the case. So first, what I would point to, let's just look at the lower time frames here for a moment, just so that we can see exactly what the type of price structure that's currently unfolding. So as we can see here, this is the 15-minute price chart, 15-minute candles here. And as we can see, this resistance zone that has unfolded just above $5.60 really has started to form a triple top resistance zone. We have seen this area tested on 2 separate occasions already, once here and then once again here. And now the real question is whether or not we're going to see a final test here for the 3rd time. So the main question at this point is, will this develop into a triple top resistance zone? And will share prices start to move lower if that does occur? And the main key area to watch to the downside comes in right around $5.20. This would be the 23.6% Fibonacci retracement of this major ascending move higher. And then in addition to that, as we can see here, this is also a very significant level of historical support. Now that the exponential moving average cluster has started to continue moving into the positive direction, what we can see is that the 200 period EMA is now also coming into contact with this zone. So we do really have 3 separate signals that are unfolding right in the same area. So if we did see a break below $5.20, that would suggest that this upward price movement is now ready to start to reverse in the negative direction, and that we could see a pullback to the downside. Of course, we're not there yet, and we have to prepare for these downside scenarios. So what we're going to do is move back to the 4-hour time frame and take a look at how far prices could move if we were to see share prices fall below this $5.20 mark. So currently, what we're looking at here would be a potential price target coming in at $4.80. This would match some historical support zones and closely coincide with the $4.90 Fibonacci retracement. So if we break below this level, we have to look at 2 possible scenarios that could start to unfold at that point. Specifically, what we would first be looking at to the downside, if negative momentum is starting to build in that direction, what we would first expect would be to see a retracement back into the 61.8% Fib zone, which currently comes in just above the $4.40 mark. So that would be roughly here. This would be a significant area as well because, as we can see, this is roughly where the 100 period exponential moving average rests. That would be this rising purple line. And then in addition to that, we have the 61.8% Fib zone coming into contact right with that area. So this would be a fairly critical level as well to the downside. But overall, we still are maintaining some positive momentum in the indicator reading itself. So this is the 4-hour time frame. And as we can see here, the relative strength index reading for that time frame is still showing a bullish condition. Things are moving in the upward direction, but share prices have also started to show some evidence of decline at these highs because share prices were trading in heavily overbought territory, with the indicator reading coming in closely to the 85 level, which is very high. Anything above 70 would be considered to be overbought. So that does suggest that share prices need to retrace a bit from here so that we can start to see a bit of a pullback and allow share prices to sort of reset themselves and allow these oversold indicator readings to work themselves off. As this has happened, we have already seen this start to happen here. And the relative strength index, the purple line, has now crossed below the yellow line, which is the exponential moving average of the relative strength index. So these are both bearish signals here that are starting to develop. But share prices could continue to move lower, much further actually, before we would start to threaten this prior uptrend line, which does signify positive bullish momentum that is currently underlying the stock. So, at the way things look currently, we could definitely probably fall back into this 38.2% Fibonacci retracement without breaking this uptrend. Of course, we need to continue monitoring the stock price itself, the stock chart itself, to see if this is actually the case, because a lot of this depends on how much time it would take for share prices to move into that region. That would largely determine whether or not these trends would really be breaking. But the way that things are currently shaping up here, it does look like we could even move into a retest of this 480, 490 support zone without breaking through this upward trend in momentum that is being shown on the relative strength index reading. So if we were to continue to move higher here, we should also be looking at the bullish scenario so that we can maintain a balanced view here. And we can see that if we pull out on the price chart, the next level to the top side is coming in at the $6.01 double top region, which finalized itself during the middle of May 2024. So roughly May 15 is when this started to develop here. And as we can see, this is a very substantial level of resistance. The last time that we saw this area trade, we did ultimately see share prices move back into this $3.60 support zone that we have been watching for the stock for quite some time. Fortunately, that area did hold. But if we see another retest of $6 and a failure there, and then a third test of this $3.60 area, there is an increased probability then that we could start to see that area break. In other words, if you start to see one area of support tested many, many times over and over again, there's an increased chance that eventually that area will start to break, and then it might not hold up any longer. So while share prices are still trading below this $6 mark, you do have to look at this stock with some caution here. We can't just expect that share prices are going to be rocketing higher necessarily, because you do have to get above this double top resistance zone at 601 first. If this does not happen, or if we see a price failure here, it is still quite feasible that we could see a retest of this $3.60 area relatively soon. So this is the current stock market update for NIO Incorporated, stock ticker NIO. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market, lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership, and start trading stocks with the pros.